So now the gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you so much, Chairman. As you probably, all of you, I don't know if in October, the FDIC and OCC and Fed withdrew their interagency principles for managing climate-related financial risk. Are you all aware of that?
Yes.
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 Okay, nodding. The associated framework required banks with over $100 billion in assets to consider climate-related financial risks and business strategy, risk management, and strategic planning. The agencies claimed that the principles are unnecessary because the agency's existing safety and soundness standards are adequate. But climate-related financial risk is unique. We all know that. The scale of potential impacts, I've seen it all alone in my own district, the complexity of the climate system, the existence of multiple positive feedback loops, the long time horizons on which climate change operates are all singular. So Vice Chair Bowman, can you explain how existing safety and soundness standards will adequately capture the unique features of climate risk, take the potential impact of climate systems, multiple tipping points, for example, whose precise thresholds are uncertain, it's just can't really predict this, and which may lead to runaway changes that cannot be reversed.
Well, it's important to note that banks are not climate scientists and they don't make predictions about what the climate will hold, but they do and have for, since the dawn of time, or as long as banks have existed, understood how to manage risks from the environment and from natural disasters. I'm from Kansas, a neighbor to your state. We frequently experience natural disasters, and also agriculture is a common business service that's provided for lending. From banks.
I mean, some of
they
them
know how to
though,
manage, but they know how to manage these risks. And in the aggregate, climate doesn't present a more material risk across the board than any other risk that banks face. And they know how to manage these risks. So it doesn't make sense.
What do you take with the Fed memo? In the memo, it actually says that the principles may be, quote, distracting firms from the management of material financial risks. This implies that climate-related financial risks are not material. I mean, Vice Chair, do you believe climate-related risks are not material?
I wouldn't say that they're not material. What I would say is that they're not more important than other risks that banks face, and banks regularly manage their risks.
Dozens of billion-dollar climate disasters each year, correct?
I don't know.
It's dozens of billion-dollar climate disasters happen each year, which destroy property and wipe out assets. Are no interest to investors?
Well, it certainly isn't that there's no interest. It's just that the risk that's posed by these events isn't more material than other risks that banks face.
So 10 years ago, former Bank of England Governor Mark Carney gave a speech titled, it's a very good speech, I recommend you all, Breaking the Tragedy of the Horizon. In that speech, Carney noted a unique challenge for regulators. He said that through the impacts of climate change will be most devastating in the future. Action to minimize those impacts is required right now. And Carney said, quote, "One, climate change becomes a defining issue for financial stability, and it may already be too late." Vice Chair Bowman, do you agree with that quote above? And
I don't agree with that quote, no. I think it overestimates
then would
the
you
risk of
determine if
climate.
climate change poses a threat to financial stability or to the banking system? So climate risk is no risk to the financial system.
That's clearly not what I've said in this conversation, clearly.
So you don't believe in what Carney's saying?
I do not agree with what Carney says, no.
But you believe that climate risk is a
politician in Canada, so
yeah,
it's hard to.
I know,
take
Vice
advice
Chair.
from
I think for me, it's the
politician.
threat to financial stability and the fact that we do nothing about it right now.
I would not say we do nothing about
But we
it.
have dozens of billion-dollar climate disasters right now.
But banks do manage the risks that are posed by climate events.
I think they're just waiting for us to bail them out each time. Earlier this year, Chair Powell testified at the Senate Banking Committee hearing that due to climate change, quote, "If you fast forward to 10, 15 years, there will be regions of the country where you can't get a mortgage, okay? There won't be ATMs or banks won't have branches or anything like that." Vice Chair, do you believe the Fed need to wait for such impacts before taking action? Because I think in some places, some people can't even get insurance right now.
The Federal Reserve is not an insurance regulator. The states are the regulators for
So the feds will bail out the states.
insurance industry. So Those risks in that policy is the determination of state commissioners.
So we're
and
going to
they're
wait till all this
overseeing
happens.
that.
We don't really want to consider it.
It's not the Fed's remit.
I know, okay. All right, thank you.